Today on the Brisbane Property Podcast, it is Market Update Day once again. So we are going to be running through all of the latest data from CoreLogic and PropTrack and also SQM research. But on top of that, we're going to be providing some local commentary as to what we are seeing out and about on the ground. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison, and it's market update time.
Yes, one of my favourite episodes each month because I get to share with you the research that I have done in relation to what's been happening in the data, but we also try to break that down to what's relevant to you as a listener, especially if you are a property buyer in Brisbane right now, because a lot of what we talk about is what we're seeing on the ground. And of course, we feel that is much more relevant than what the data shows because data is always retrospective, but hopefully we'll provide that holistic view for all of you listeners today.
And as I've mentioned a few times before, and any new listeners, if you like the graphs and all the information in detail, Melinda does do a blog, and you can go to our website to have a look at that and read through that blog as well.
streamlineproperty.com.au. Head on over to the blog tab and you'll be able to access all of the monthly market updates that have been completed. And in fact, I think they go back about 6 years. So you can even track back if you wish. Have a look at what we were predicting back 5 or 6 years ago and see if that's actually what eventuated. Obviously, you'd need a lot of spare time to read that many blogs, but there's hundreds on that website.
So Brisbane's property market, we've continued to rank among the top performing capitals throughout Australia, and another strong month in Brisbane.
Yeah, that's right. So looking at our annual performance, Brisbane remains in second place in terms of dwelling value growth across all capital city markets throughout the country. And over the last quarter, Brisbane ranks in third place behind Perth and Adelaide in terms of its total dwelling values growth. And there's definitely market segmentation, and this has been evident over many months now, where there's some markets that continue to grow and there's other markets that are flat, or in fact, some markets that are seeing some very small price declines. So certainly not one Australian property market, and we're seeing a lot of localized diversification happening in terms of prices.
And the unit and townhouse market, that's performed really well. We'll go into detail as we normally do with dwellings, houses, units. We'll cover the rental market as well. But we've seen some buyers, with a bit of caution, I think, in the market as well.
I do think buyers are starting to exercise more caution compared to 3 or 4 months ago. I feel like some of that urgency may have left the market, especially in some sectors. However, I think a lot of it is, the fact that there's been a very fast market and a lot of sellers are the ones that remain in control. So whilst buyers might be starting to, hold back a little bit, I guess, become a little bit more cautious, we're also starting to see sellers get ahead of the market. So sellers still think that the property market is shifting faster than it actually is. So some of those properties are not selling as quickly, not across the board, because there's still some very quick sales, but we are seeing some properties sit a little bit longer while the buyers and sellers adjust to meet current market conditions.
And listing numbers. So we've seen a little bit of an increase, I believe, in July. New listings in Brisbane rose by 5.15% compared to the previous month, while total listings increased by 2.87%.
Yeah, so that's reassuring for property buyers, although when we look at how the total listing volumes are performing against long-term averages, it's not really significant news. Looking at the number of properties currently available for sale, according to SQM research, we're looking at just under 17,000 properties across Greater Brisbane. Now, compare that to the long-term average, which is about 30,000 listings. And that gives you a really clear idea of just how tight the property market is, just how few properties there are available compared to what typically would have been available over the last 5-year period on average. So tight supply, and this is the conversation that we keep having each month. It is this tight supply market alongside demand that has not actually fallen away. And this is what's putting pressure on prices and causing prices to continue to escalate month on month.
And approvals. So if we look at the dwellings that are actually coming along that are getting built, we've seen a slight increase in May, which saw an increase of 6.3% of total dwelling approvals.
Yeah, that's in Queensland. So I will say that's good news. However, it's still well below what the National Cabinet's goal of building 1.2 million new well-located homes over the next 5 years is likely to require. So, and I will also say these are new approvals. So we saw a small spike in the new approvals in May throughout Queensland. That does not guarantee what's approved is going to get built. So we don't think that new construction is actually going to be sufficient to meet the demand in Brisbane anytime in the foreseeable future.
No, and I know that there is an election coming up in October later this year in Queensland. So there'll be some things there that I think the government are going to look at when it comes to that housing side of things as well.
Yeah, 3 months away until the state election. And I do think that housing is likely to become a key focus for the major political parties. And I know the REIQ, that's the Real Estate Institute of Queensland, have put forward a proposal to address the housing crisis. So it'll be interesting to see whether the governments take any note of that. But we do have major issues. We don't have enough dwellings available to rent. We don't have enough dwellings available to buy. And this is what's causing upward pressure on rents and prices.
Yeah, I think that not only that conversation with housing, but there'll be quite a few things when it comes to the election. I think housing, Olympics, I think we can probably talk all day about things like that, but there'll be a lot of things, and housing, I think, will be very, very high on the agenda for all the parties at the election.
And let's not forget some of the recent legislative changes that have now been put into effect by the Queensland government. And one of those relates to rental price increases for landlords that own properties here in Queensland. Now, the most recent legislation that's now in place is that landlords are now prohibited from increasing their rent on a new lease for a specific property if it was raised less than 12 months ago. So let me explain how this is relevant for you if you are a property investor owning property here in Brisbane. If you're purchasing a property and that property is vacant, but it previously had a tenant in there, and that tenancy agreement was only for a 6-month period. When you purchase that property and when you advertise the property for rent, you can only advertise the property for the same amount as what that property was rented for previously. Even though you are the new owner, the fact that that property was rented for a set amount within the last 12 months prohibits you from charging a higher amount of rent. The other situation is that if you are a property investor and you have a 6-month tenancy in place, tenants move out, and you significantly renovate that property, you cannot rent that property out for a higher price than what it was originally rented. This is significant for, removing the rights of landlords. Respectfully, I will say that the majority of rental agreements or tenancy agreements entered into are for a period of 12 months. So it will only impact a very small number of property investors whose rental agreements may be for a shorter period of time, but it is something that must be considered. It's also important to consider if you are purchasing a property that has a tenant in place, you can't actually change that rent until that 12-month tenancy agreement or that 12-month period has passed between that last rental price increase. So big changes happening in that space, and it is important for you to be aware of it if you are looking to buy in Brisbane and you're looking to invest in property in Brisbane. Yeah,
that's a really huge tip there, I think, for those investors that you've mentioned there about that, making sure you understand the tenancy agreement before you take on a property. One, you take on the tenant, you also take on the tenancy agreement, as you mentioned, about doing renovations, improvements, things like that. If that's something that people are looking for, be aware of that. The other one I'd probably say is if you do have investment properties, make sure the rent is up to date. And make sure that they're at that market value, and that's what the rent is getting, because that's something you need to make sure that you maintain that with your property manager as it goes along. Otherwise, it will undervalue your property.
Absolutely. And a good property manager should be helping you by providing annual rent reviews. And, if you decide not to increase the rent for a 12-month period and therefore, you then look to sell, that could actually significantly impact on the value of your your property. So this is why it is important to take an active management role if you are a property investor in managing your property manager. We know there's some property managers that do a brilliant job of ensuring that each time that the tenancy agreement comes up for renewal, that they do consider where the market rent will sit. Other property managers perhaps are a little lazier and they'll just roll that tenant into a new tenancy agreement without reviewing the rent. So it does require you to understand what's been happening month on month in terms of rent price growth, so that you know whether to have that conversation with your property manager. But I'd definitely make it a habit. I will say, and I'm not, spruiking the fact that landlords should be raising the rent all the time, because we know that it is tough for tenants out there in the market. However, those landlords that do own property, if they're not actually achieving what they should be achieving in terms of market rent, that also devalues their assets. So there's definitely, both sides of the equation that need to be considered.
Yeah, I don't think as a property investor, don't just rely on your property manager to do it all. You own the property, so you are responsible for it, and you can make the calls to talk to your property manager about that review. But don't just rely on them to come to you about it. Actually drive that yourself. You own it yourself. They don't own it. So there has also been obviously some of those legislative changes. There's made some landlords have obviously sold out of their properties, and that has influenced that as well.
Yeah, I just wanted to touch on some recent research that was conducted by Suburb Trends, and it showed there's several areas in Brisbane where a significantly greater portion of properties that were listed for sale during the 2024 financial year were actually previously rental properties. So in these locations, what this means is that it's more than likely that the rental supply has actually decreased in these locations. So, for example, postcode 4031, which includes Kedron and Gordon Park, in this area, 35% of the listings in the last financial year were ex-rental properties. So that's actually quite a high number. Similarly, 34% of properties in postcode 4059, and that includes suburbs like Kelvin Grove and Red Hill, they were also previously rental properties. And one other postcode worth mentioning from this study by Suburb Trends is postcode 4114, which includes Logan Central, Woodridge and Kingston. In this area, 34% of the properties that were listed for sale in the last financial year were reported as ex-rental properties. So in these areas, it may be that rental supply has reduced over the last 12 months.
So auction clearance rates. So auctions, we've seen some activity, very, very strong. I was actually at one on the weekend, and this is live straight out on the Saturday. There was 15 registered bidders at this auction. Really, really strong bidding. I think it was about 5 or 6 people actively bidding during that, and it sold for quite a hefty price, I think.
What suburb was that one?
That was in Wooloowin, in the inner north area. So really strong. Small little cottage, but achieved a really good price. But again, that's the market. That's what people were prepared to buy. And as I say, the 15 registered, so really good numbers at that auction.
But at the same time, there's other auctions where it is much harder to actually find those registered bidders. And there was an example on the same day where there were only 2 registered bidders at another property, and it was in an adjoining suburb or the same suburb.
Yeah, just not far from there as well. Yeah.
So that's an interesting trend. I just wanted to also point out before we get into the data itself that in the last 12 months, according to lending data, the number of investors getting back into the Queensland market has absolutely escalated. So the ABS lending data is now showing that 39.1% of housing finance commitments in Queensland are actually for investment properties. So despite the fact that in some areas investors may have been selling out, there's also renewed interest in Queensland as a focus point for property investors, and therefore that's coming through and reflecting in that finance lending data.
Yeah, I think there'll be people flocking to Brisbane, especially now Alan Borders on the Gabba one and building a new stadium, but we won't jump into that side of it. So auction clearance rates, as we said, strong, average of 3.1 bidder registrations per auction, and 63.6 of those registered actively participating in an auction.
And clearance rates have decreased slightly. So in June, they were 64.8%, but by July, they'd slipped slightly to 61.8%. So, a reflection of a slightly quieter market, but still well above long-term averages for Brisbane auctions. So it'd be interesting to see what happens in the weeks ahead.
And we will mention that all that data actually comes from Apollo Auctions that we get the auction details from. So if we jump into dwelling values for Brisbane in July, we've seen an increase of 1.1%, slight slowdown from June's growth of 1.2%.
Yeah, so obviously still very strong monthly growth, and Brisbane's dwelling values are still at peak. Current median value for all dwellings at just under $874,000, and that's an increase of just under $15,000 over the last 4 weeks. And if we want to quantify that over a 3-month period, it's actually $33,000 of price growth movement over the last 3 months. So that's a lot. And no wonder people are getting, priced out of the market when it's shifting so rapidly.
As I also, sorry, I know I do repeat this most times, but we do have new listeners come on board. We're reflecting on Greater Brisbane here. Okay, so
that's right.
We cover Greater Brisbane when we talk about these numbers. PropTrack, if we jump onto their details, increase of 0.34% and a median price there of $853,000 for Brisbane.
That's right. So the same positive growth trend as we would expect. And it also shows that the Brisbane market is at peak values based on the most recent growth. I think that, like most other capital city markets, except Darwin and Canberra, where the trend is a little bit different, the upper quartile of the Brisbane property market, that is the most expensive 25% of properties that have transacted, that segment is experiencing slightly slower growth in dwelling values over the last quarter compared to the lower valued dwellings. That's the lowest 25% of property values. So, the more affordable segment of the market now is actually growing at a faster rate. Over the last 3 months, we've seen that segment grow 5.3%, which is quite a big shift. And if we want to actually understand the top segment of the market, that was a shift of 3.2%. So quite a big difference there. And a lot of that is potentially due to affordability. Now, I've said it before, and I'm going to say it once again, that this is dwellings data. So as you'll find out later in this episode, the unit and townhouse market here in Brisbane is performing at almost double the rate of growth of the house market. So most of those properties will be transacting in the bottom 25% of property values as well. So there will be some skewing of this data simply because of the composition. So important for people to keep in mind, because you cannot assume that the cheaper houses across all of Greater Brisbane are the ones that are driving the growth. It's also going to be influenced by the volume and the value that's changing in that unit segment of the market.
It's really interesting that trend, and when you look at the graph that is actually on that, and that's why I talk about that blog to go and have a look at the website. It's the big areas that are performing, Perth, Adelaide, Brisbane, most markets actually, it's all the same sort of trend. So that bottom section is trending high, and the top section is probably the lowest part of each market in those areas.
And I think it's super important for people that are not here in Brisbane to understand that price growth in some locations is driven by owner-occupiers, and in other locations it can be driven by property investors. So understanding who's buying and why is always a useful indicator, and also understanding whether the local demographic can afford to buy what an investor might be paying for a property in a particular location is a really good thing to understand, because if you're buying into an area as an investor that locals cannot afford to buy in themselves because of that local demographic, that exposes your property and your portfolio to risk. Okay, so it is important to understand that. We can look at the last 12 months in terms of growth in areas across Brisbane, and there has been some strong growth in areas dominated by investors, and we know that based on the breakdown of the number of owner-occupiers and investors in some markets. So if you're an investor and you're buying in Brisbane, it's so important for you to know the breakdown of the owner-occupier ratio to the number of investors in that location, and also what is the affordability level like for owner occupiers in that area, because if you have to sell, it's going to be harder to sell to another investor compared to an owner occupier, especially if the market turns and there's a downturn in the market. You want to be ensuring that an owner occupier can buy that property if investors all of a sudden turn around and stop purchasing in that market. And if they can't afford it, that's huge risk for you as a property investor.
Another good tip for the investors. Housing market. So if we jump into the housing market now, again, we've seen the median price in Brisbane rise 1%, slightly down from last month, which was 1.1%. Over the past 3 months, the quarterly house growth stands at 3.4%.
Yes, and I'm going to jump ahead and say the quarterly unit growth sits at 5.8%. That is the difference between the two markets right now. Houses rose by 1% in the month of July. Units and townhouses rose by 1.9%. I just want to set that as a comparison right now.
Jumped out of the normal routine that we go from houses to units, but that is a good comparison when you look at that. As you said, 1% houses, 1.9% for units.
But looking specifically at the housing market, we've seen an increase of 15.2% in values over the last 12 months. Now, if you're comparing that to the unit market, we've seen an increase of 19.6% in that segment of the market. Again, I just wanted to point out the comparison between the two segments of the market here in Brisbane, because there has been a divergence in performance. Now, for a house right now in Brisbane, the current median value is $966,825. So no, you cannot buy a house within 10 kilometres of the CBD with a budget of $750,000 or $800,000 unless it is significantly impacted by something. We often, get people inquiring to buy a house in the Brisbane City Council region or within 10 kilometres of the CBD, and they're trying to buy under that median value. It's very hard to do so unless there's a compromise or a poor quality property that needs renovation and improvement works. Keep that in mind if you are looking to buy in that area. The change over the last month in dollar value based on that median growth is just under $14,000 for a house at that median value, or around $32,000 of price growth over the last 3 months. And that's for a property that sits around that $960,000 price point.
So over a year, that's just under $150,000.
It's a lot
in 12 months.
And I know we just had someone inquire because about our services, because a friend of theirs purchased with us about 3 years ago, and they were looking for something similar. Well, in the last 3 years, the market here in Brisbane has shifted nearly 50%. So they were quite surprised when we explained that. Not local, don't understand the local market, but what their friends purchased 3 years ago is very different to what the same budget today will purchase here in Brisbane. And that's why our team exists, to educate people on the market and help them understand what their budget will buy. Similar
trend on house prices through PropTrack. The data there shows an increase of 0.3% and median value of $951,000.
Yeah, and of course, the house market is at peak here in Brisbane. It's potentially also at the lowest level as well, and that doesn't make sense for a lot of people. I mean, simply because of that price pressure, it's likely that prices won't be this low for a long period of time either. It's a positive growth trend that we're experiencing.
So if we jump into units, so the unit market, again, we've as Melinda mentioned, we've seen that increase of 1.9%. Quarterly data showing a 5.8 rise for the unit market.
And that's right. And the annual increase at 19.6%. So the median value right now for a unit in Greater Brisbane is $638,000. Now that is up $16,342 from last month, or $37,056 from 3 months ago. That is buying a unit at that median value. So the unit market is just performing so strongly month on month. Over the last 12 months, a median unit value has increased by $125,226. Now that's massive when we're talking around that $630,000 price point. So if you are in that market, you will experience high competition levels. If you are out and about on the ground in Brisbane looking at units, you will have seen for a lot of those units, the lineups that happen and the number or the volume of buyers that attend those open homes.
And PropTrack for the unit data, an increase of 0.5% for a median value of $663,000.
Yeah, same positive growth trend, which is as we would expect.
So when we're talking investors, the rental market becomes really important. I know we touched a little bit on the rental market earlier. Very, very tight, as we've talked about. Vacancy rates just 1.1%.
Yeah, that hasn't changed between June and July. So still a really tight rental market, not a lot of properties available for rent. But I will say for the first time since 2020, that's back when the pandemic hit us, Brisbane has seen a slight monthly decrease in rents, negative 0.1%. So tenants will be celebrating this fact. So over the past year, unit rents have actually dropped more than 8% in their annual rate of growth. And this is possibly due to slower rates of overseas migration, which has led to a slight increase in tenant demand, and especially in that higher density space. However, despite this, annual growth in rents is still occurring at around 7% per annum. So this is still well above the long-term average, but that rate of growth or the magnitude of growth is actually starting to slow down, which is good news for tenants who have been struggling to keep up with that pace of growth.
I thought it was interesting. The information that we've got here is that the larger rental properties are experiencing some stronger growth.
Yeah, look, that's some information that was released by CoreLogic in the last month. So for renters that share or live in shared living situations, such as group households or multi-generational families, those houses that have 5 or more bedrooms and any units with 4 or more may actually be more practical or affordable options. So that has been an interesting trend that we've observed, and it will be, especially off the back of COVID, where everybody looked for space and they wanted, to be living separately. Now we're starting to see more and more people grouped back in, and there's been stronger performance in unit rents, based on the number of bedrooms.
Yeah, that's really interesting because obviously, as you said, with the COVID side of things, everyone wanted space and we're going into bigger properties. Now the bigger properties, people are sharing that rent, and you're getting people share that rent, and obviously that side of the market is very, very strong.
Yeah. So in short, just to summarise, that data, if you are a property investor and you own a house with 5+ bedrooms, the rate of growth in rents for that type of product has been higher than houses that are 2, 3, and 4 bedroom over the last 12 months. And for units, if you've owned a unit with 4+ bedrooms, the rate of growth in rents for that type of product has been much higher than the rate of growth for 1, 2, or 3 bedroom units. So that hopefully just clarifies that information as well.
So gross yields, before you go into the breakdown of all those vacancy rates, gross yields in Brisbane continuing to tighten. House yields 3.5%, and unit yields sitting around 4.7%.
Yeah, look, I think that's a reflection of the fact that the prices, units and house prices, have been growing at a faster rate. The yield, the income that is generated from properties, that's the rent income, has been growing at a faster rate than property prices. So yields are being compressed. But I will say also that investors will be finding it increasingly difficult to identify cash flow positive properties across the city of Brisbane without significant cash deposits being put in up front. And that is simply because those yields are actually compressing month on month. Also, if I can just circle back to vacancy rates by region, I mentioned across all of Brisbane 1.1% vacancy in June and also in July. When we look at Beenleigh, there's been no change in that region. Vacancy is still sitting at 0.8%, pretty tight. The Brisbane CBD vacancy has gone from 1.9 to 1.8% month on month. East Brisbane remains stable at 1.2%. The inner Brisbane regions, it's declined slightly from 1.5 to 1.4%. Ipswich from 1.1% to 1% vacancy between June and July. And then northern Brisbane, still really tight here, from 0.8% to 0.7%. So this is the tightest supply area for all of Greater Brisbane. Southeast Brisbane, 1.2% in June, 1.2% in July. The same numbers exist for southern Brisbane, no change between the months, both sitting at 1.2%. And western Brisbane, a slight tightening of vacancy from 1.2% to 1.1% between June and July.
So in a bit of a summary, we've survived the Ekka in Brisbane. Had a bit of rain over the Ekka this year, which is unusual. So which is unfortunate for the show people. But yeah, we've survived Ekka up here in Brisbane. That's our show. Those in the southern areas, you've got the Royal Easter and things like that in Sydney. So We've got the Eka here in Brizzy. So we've survived that. But yeah, look, it's still really, really tight out there. Still a lot of buyers and tight on properties as well.
Yeah, but I will say that housing affordability is undoubtedly becoming more challenging. And this would be the case, especially in suburbs where property values have risen much faster than incomes. And also where baseline incomes were already below average. So there's definitely going to be some areas that are hurting a lot more than others. And I think it's likely the reason why we are seeing a lot of buyers make compromises, such as purchasing homes much further away from their workplace and opting for smaller attached dwellings, that's units or townhouses, in more convenient locations rather than detached homes further out. And that's why we've seen this shift in demand in the unit space.
I think one of the things you did touch on, really important for the investors to think about, is location. As you touched earlier on, being aware of where you're buying, because if investors are priced out, if things change, you want to appeal to those homeowners. So I think that's a really, really good tip for people to be aware and make sure you're buying in the right location if you are investing in property as well.
Yes, be super cautious about the location that you're buying, because in areas where local buyers are priced out and investors are the part of the market that are driving prices up, there's absolutely a high risk that increased market volatility will exist in the future. So I'd be very aware of that.
I think population growth, still very, very strong. Employment, super low. Everyone's got a job, I think. If they haven't, there's one out there. So, yeah, I think we're seeing that employment low, population growth still strong, stable interest rates. I think the market in Brisbane is still got a growth in it despite some of those challenges.
Yeah, absolutely. I mean, we've got a very strong local economy, and the infrastructure boost is really likely to continue driving the performance of the property market as a whole. So, I think there's definitely a lot of upside potential for Brisbane property, especially because there's very low supply. The pipeline of new construction is low. We're really in a tight supply market in terms of listings, and yet the demand side pressures just continue to escalate. So because of those reasons, fundamentally, it's very unlikely, unless we see some big global impact, it's very unlikely we're going to see those property values come backward. We'd like to see them stabilise. A stable market is obviously something that people feel more comfortable about, but right now that price pressure will continue to exist, and we're likely to see that those prices continue to escalate.
Yeah, and I think for the buyers who are out there waiting for Brisbane property market to slow down, they might be a little bit disappointed from what we're seeing here on the ground and all the information and the data that we're seeing as well.
Yeah, and I just say it's never too late to enter the market. There's a lot of opportunities still that exist. And, in fact, I'd say that there's still many suburbs in Brisbane where affordability remains well and truly intact. I know we've talked about some at-risk locations, but these areas could see continued price growth well into the future, pushing the median value across Brisbane even higher. So it is going to be important for investors moving forward to really understand the location that they're buying into, because we are in a very different market compared to that post-COVID boom. We've got much higher interest rates. Although they're stable, it is a different consideration when you are purchasing property for investment purposes. When interest rates were at 2%, obviously it was quite easy to generate cash flow from a lot of the purchases. That's no longer the case. So capital growth is going to be something that is going to be more important to people, and that's going to come down to location selection. And of course, that's why our team of qualified property investment advisors exists, to be able to guide people expertly into the type of asset that best suits their individual needs and circumstances.
Yeah, so that's our market update. Look, if you're out there and you're unsure about property, don't know where to buy, what to buy, how to buy, our services range from a whole range of top type of services for people to help them out, whether it's just auction bidding only, helping you out if you're not sure what agent to go with, buying investment property, buying a home, relocating. If you're unsure, reach out to Streamline Property, and we're more than happy to have a chat and see if we can help out. So thanks very much for listening. As usual, I will let Melinda wrap it up. It's been great talking, and talk again next week. Thanks very much for listening. Bye for now.
Yes, thanks for joining us once again on the Brisbane Property Podcast. We hope you've enjoyed this market update episode once again. If you have enjoyed it, please share this episode with friends and family. Don't forget to leave us a review. We always value your feedback and input. So until next week, have a good one, and we'll speak to you again then. Bye for now.